It is showtime. Hi, you guys. I'm sorry. Here, hold on. Now I feel
Good morning.
I just switched computers today. As you guys, we have a guest today. We have Josh Standley. So, welcome to the Morning Muffin Show, your morning carb load of real estate. Josh and I have been on here, I feel like, since 22. So we've been chatting about all things in the tax world. And for those of you, I'm going to hide this. His name is Josh Standley. He has a company in Duluth that does accounting. His passion is business accounting, like all things LLC, S Corp, things like that. And he is amazing. And his business is called DKK Accounting. Did I get that correct?
Yep.
Okay.
And I just hired Josh to do to be my CPA.
Yay!
Yeah.
I'm gonna just do this.
So our topic today is tax brackets.
It is. Hold on. I don't know why when I touch this stuff, it just thinks that I'm trying to edit it instead of popping up. Sorry.
It's okay. Tax brackets.
Tax brackets. And we talked a little bit about this. It's different when he mostly deals with like businesses and things like that, as opposed to individual tax income. Am I correct?
We have over 300 individuals we deal with too. Just the business side is my passion. Individuals, gotcha. We still do them and have complicated individual returns. But the fun stuff is the business for me. So
yeah,
the fun stuff. I love it.
Yeah.
You do my husband's taxes, and I love it. This is the reason why I love you, because my husband is the kind of guy that shows up with his pockets full of receipts. He literally shows up like this, like.
Usually it's a baggie full of receipts, like you get from the store. And he's one of the few people I do that for.
So in other words, you're not recommending that?
No, you should get organized before tax season.
Yeah, we talked about that the other day.
Okay, good.
Yeah, we talked about what we do to organize our taxes and whatnot. And I think it's so funny because he's such a parody, and he's gonna kill me if he's on here watching this. Will you please comment below? There's this British comedy show called Black Books, where Bernard Black owns a bookstore called Black Books, and he does his taxes very similar. In fact, he shows up with like a bunch of receipts, like just like that. Anyway, I'll put a link to that below. Oh wait, here he is.
I am. Hi, Terry.
Okay.
We know your secrets now.
Yeah. Okay. So let's get into the tax bracket. A lot of people don't understand them. Can you explain what a tax bracket is?
Sure. In simple terms, a tax bracket is the more income you make, the higher tax you're going to pay. And so there's different revenue levels. So say 0 and 9,000 is 10%, and 9,000 to 40,000 is 12%. So the more money you make, the more tax you pay. And so it's considered a graduated tax bracket.
Gotcha. So is that like throughout the year? So like you make $9,000 in the beginning, it's taxed 10%. And then as you start making more money, it goes up?
So it's basically based on total income. So it's not based on how much you make throughout the year. It's the total amount you make at the end of the year. So gotcha. Whatever you made, and it combines all the income you make. So whether it be income from a job, income from self-employment, your business, income from other sources. It's all combined to figure out your tax bracket.
Gotcha. Yeah. So, for example, 1099s. Even if you make, like, say somebody's selling Mary Kay, for example, and they sell maybe $400 worth, and they get a 1099 from Mary Kay. That 1099 is recorded, correct, to the government on Mary Kay's side. So it's your job to report it as part of your income when you do your taxes.
Correct.
Yeah. There can sometimes be some surprises when getting a mortgage, when we send for your tax transcripts and they don't align with what people filed. So just make sure if you're out there watching it, I know everybody's got this side hustle now. Make sure you're claiming your side hustle because it can really come back to haunt you.
It can, definitely.
Some people think that they ignore that and they don't file it. Well, nothing happens right away. The government will eventually catch on to it. Maybe not that first year, but eventually.
I like that disembodied hand. Thumb drive?
Yeah, that was my associate.
He snuck in.
I love that. I really want people to peek their head in and say hello. Okay.
I think Jen froze a little bit.
When it comes to tax brackets, I know the thing that when you're married too, our tax brackets could change as well. Can you talk about what happens when somebody gets married and they start having to file taxes?
Sure. When you get married and you have to file taxes, now you combine that income and the tax brackets are adjusted for that. So just for example, the 10% tax bracket for a single person is from 0 to 9,875. But a tax bracket for a married couple is 0 to 19,750. So basically, it's doubled to account for that as two people. However, the biggest issue when people end up owing, especially when you work a job, is that it really depends on what you're claiming. And so if you're claiming married and 4, but you don't have any kids, you're probably going to owe at the end of the year. So it's super important to make sure your withholding is correct. And a lot of people don't understand why they owe at the end of the year. Check with your withholding, check with your accountant or your HR department, and they might be able to help you fix that. So that way, at the end of the year, hopefully you don't owe anything or get close to 0, maybe paying a little bit. We generally recommend people to claim married or single 0 no matter what, because they change the payroll tax tables and withholding tables. So
I have a question for you. So is there a difference in what you owe for taxes if you are married filing separately, or is it the same amount? What is the difference there?
So married filing separately, when you file separately, you lose all tax deductions and credits, basically. So you end up owing more money.
What? Really?
Yep. Yes.
It's the highest tax bracket there is. Yeah.
That's like being punished.
It's kind of like being punished. Yeah.
I don't like that.
But then again, so is marriage. No, I'm just kidding.
What did you say?
But then again, so is marriage. I'm just kidding.
Your wife could be watching this right now.
Marriage is punishment.
She has the same humor as me, so.
I feel like my husband would agree with that. He's like, ugh. He's like, no, because I'm self-employed, but he's a W-2 employee. So what I always owe, and then he gets money back usually, and we wash each other out essentially a lot of times. So then we end up owing, nothing or very little. My goal is to pay in 0 if I do everything right, or like write a check for like $500. Like that is like ideal for me. But there's a lot of people that love that tax return. And so they use that as like an incentive or like a bonus. Josh, what do you think about that?
I have 2 different opinions. One, if you're self-employed, you want to keep what you owe below $1,000 because you avoid additional penalties and interest on that money. Two, we generally recommend people claim single zero and get money back. And a lot of accountants disagree with that. However, people are creatures of habit. And so, you're fighting people's habits versus just doing a tax return. And if you want them to not owe and have this debt that snowballs every single year, we usually recommend that single zero. Yeah, it's either going to pay back debt you owe or you'll get some money, and maybe you could have invested it and made some more money. But again, if you get more per paycheck, people generally tend to just spend that money and create a lifestyle on that additional income instead of save it anyways. And so that's what we've found, and why I recommend not claiming more than single zero, because then you don't create this lifestyle that you can't afford and then at the end of the year owe on top of it.
Well, this is a great topic for next time when we talk. We can talk about how you can have IRAs come out of your paycheck, mutual funds, 401ks. We do SEPs. And we could talk about those as well, because it's important that you pay yourself first and save that money up front. Then, like you said, for example, creating a lifestyle out of that money that you can't stop. It's hard to stop that lifestyle, especially 2020 is the great example of that. There's people now that are, like, I'm sure, in ridiculous debt, Oh, that's gotta be hard.
It's about changing habits. Is really what it comes down to. Once you build that habit, like you said, it's hard to change that, and that's it's not just about taxes; it's about habits.
Mm-hmm. Before you got on, Lisa, I was thinking about, he's like, so how much do you pay for that? And every time I talk to an accountant, I feel so judged on my habits and my spending habits. And I'm like, oh, it's nominal. It's just like $100 a year. And I'm like, in my head, it's like I get like a little demerit in my head, that I feel like my accountant would like keep track of all my demerits. So he actually told me that it's not, they didn't use the word nominal, they use the word de minimis, right?
De minimis, yep.
And
what word?
It's called de minimis.
Okay, what is that?
Basically, like she said, it's nominal. We say it's de minimis. It's so small it's irrelevant.
Oh, okay. That's a new word.
I know, I learned a new word too. I was like, I get to use it in a sentence today. Try using it in an email, you guys. De minimis. More, yeah, I love that. Sorry, Josh. I know it's the little things in our world that make us happy.
It really is, though.
That's true.
Do you ever, but I'm sure you see this now, all these de minimis behaviors, and this is also for another show when we talk about itemization, is like the little things that start adding up a lot. And so, like when you get married and you have a lifestyle as a single person, and then you have two people that both have combined lifestyles, and then they change maybe a tax bracket after their incomes combined. Do you ever see that? Or I know that like married with no kids or no dependents can sometimes end up owing, and it's actually quite a big surprise. I had a couple clients that had a lot of money saved as their down payment of their house, and they wanted to do things in, what was the right order, which drives me nuts, you guys. There is no right order. It's all an illusion, okay? But they wanted to do things in a right order, and they wanted to get married first, but then they filed taxes and they ended up owing, and it like ate a very large chunk of their down payment. Can you tell me why?
Well, they have the combined income now, so it's more than just one person's income. It's a different tax bracket. They might be withholding incorrectly. So sometimes what people do is to get extra money per paycheck is, I'll claim single two. Now you have two people who get married and who are doing something like that. I mean, you're not withholding enough is what it comes down to. And so it's important to coordinate on those issues too. A lot of people get married and they don't think about taxes. So always check your withholding and make sure that you're withholding enough so that doesn't happen.
I don't know. This must be important. It says unknown name, and my phone is on silent, and it still came through. Like, this must be, I feel like, important, but I'm not going to answer. You guys, if you're calling during the show, don't call me during the show.
Yeah, please don't answer the phone during the show.
All right. I know Josh has to go. We are at 9:15. Josh, I'm so glad you came on. I'm sorry for the interruption.
Yes, thank you for coming on.
It's great to have you again. We've got 2 more topics we're going to talk about later this month: itemization and starting a business. And you guys have the dates and times hopefully soon. So we'll make an announcement when we coordinate something. But thank you so much, Josh, for coming on, and happy tax season.
Thanks
Happy
for having
tax
me.
season. Thanks, Josh.
Your face is like okay. Have a good day. Bye, guys.